Welcome all of you to our first live event after 2.5 years. Our last planned event was on February 18, 2020, 2 days before the COVID pandemic hit, here at the Penn Club. So can you just imagine? We survived, as we always do. Not just we survived, we thrived. Let me tell you a bit about the Financial Policy Council for all the newcomers who haven't attended our events in the past. Who are we? What do we stand for? What's our track record? Without boring you with the details, the Financial Policy Council has been in business since July 2010. We have over 70 corporate sponsors. We have 200,000 followers on social media. We are influencers, and we are here to find solutions to problems. We are neither Democrats nor Republicans. We are entrepreneur capitalists. It's all about wealth creation. If you can't create wealth, you are nothing. You are dust in the wind. We are radical capitalists. That's what we are. And this is what this country used to be, pre-COVID. We want to go back to the old USA. We are forming a movement. This is a movement. This is not a bunch of guys who are here trying to throw theories, but a bunch of guys who are accomplished entrepreneurs and who want to make a difference. That's what matters. We're not going to be bullied. We're not going to be canceled. We're not apologizing or apologetic because we are conservative and we are capitalists. We're not. It's not going to work. We are fiercely independent. We're not backed by any lobby, any PAC. We cannot be bought and sold. This is why we have 70 corporate sponsors, not an 800-pound gorilla who's going to dictate to us what we should say or do. We strongly believe as a board in independence, freedom, prosperity, wealth creation, and empowerment. Success is all about empowering people, not about making money alone. Making money is about freedom. You make money to become free, not to acquire cars and jets and planes and yachts and show them off. These are idiots who do that. The more you empower people, the more successful you're going to be. And this is what the Financial Policy Council is all about. We are now follow every video we post. We have between 15 to 30,000 viewers. We have thousands of subscribers. This was all hard work. Nobody gave us this. Nobody bought us. Nobody paid anything. It's all hard work. Overnight success is 15 years. We've been doing it for 12 years now. So there is no organization like this in America. I can assure you that. They all have agendas. They all have somebody they follow. They're all bought and sold. And for those who discuss issues, it's bullshit academia. You can read all this stuff in the press. We're not here, this panel is not about, you can read about renewable energy as long as you want, but this is different. Here we have 4 people who are specialized in the sector, who've been in the trenches, who will share with you what's good, what's bad, how you make money, how you lose money, and really get you to understand. I have zero respect for lawyers, academics, economists, professors, scientists. I have only respect for people with skin in the game, entrepreneurs. The others are here to pontificate and tell you what to do. They have nothing at risk. It's all bullshit talk, pontification, like a politician, all lies, all pontification. This is not our mantra. So I think this gives you enough idea about who we are and what we stand for the record. I would like to thank our event sponsors for this event, Impact Analytics and Rational Energy Management, for making this event happen. A big applause to them. So the topic today is about renewable energy. I mean, as you know or may not know, the renewable energy market is a beehive of activity. The amount of money available is absolutely staggering. This is not about the environment or climate change. That ship has sailed. Let's compare the issue to the $85 billion Coca-Cola brand. This issue is much wider and deeper. We estimate the awareness of climate change and renewable energy is a brand worth at least $500 billion. It is a spectacular business to be in from that perspective. The will of the people is there. Everyone wants to be green. Every investment fund and every family office wants a stake in a green future. And yet, the adoption rate of renewable energy is nowhere near what it could be. Compared to the growth of the internet that went from 0 to 2/3 of the earth in a generation. Compared to the growth of crypto, online banking, entertainment services, and such, renewable energy as a business seems sluggish. It doesn't really appear to have that explosive growth. This is about business. Governments and activists don't build successful solutions to problems. Businesses do. The upside potential is a multi-trillion-dollar renewable power sector supporting a cleaner and more peaceful world. The downside potential is a whole lot of investment down the toilet. No improvements to the energy grid, little impact on CO2 emissions, whose reduction is the original intention of these massive investments. Where are we headed? This panel we have in here for you today proposes simply to look at the market, to indeed identify the obstacles, distortions, and the Ponzi schemes that are preventing a faster moving transition. Our panelists today are, on my left, Linda Bullen from Bullen Law is most probably the most sought-after attorney in the state of Nevada for utility-scale renewable energy products. A mover and shaker at the interface between Nevada and California, specializing in complex environmental matters, specializing in hazardous waste, water, air, renewable energy, federal land use, etc. Harry Eppanapally, he is our Financial Policy Council Vice President. He's a Managing General Partner of Elysium Ventures, a next-generation global fund based in Silicon Valley, Chairman of the Board for Quicker Genomics Institute, focused to bring a revolution in consumer genomics, and Chairman of the Board for the CIC Group, a management, consulting, and advisory firm for mergers and acquisitions. Ben Rees is CEO of Evolution Market, a market leader in global energy and environmental commodity trading, and CIO of Evolution Environmental Asset Management. He's dedicated to playing a key role in the origination of new markets to help contain the world's greenhouse gas emissions. And last but not least, our good friend and board member, Tim Kaelin, CEO of Impact Analytics, our sponsor, and a former technology expert with the CIA. I learned a lot of things from you for the CIA, Tim. Author of The Energy Net, a free enterprise solution to our economy, radical Islam, and climate change. I like this shit. My two biggest enemies. Radical Islam and climate change. Now, I'll tell you about the format we have here. So I have a few questions I will ask the panelists to moderate. Then I'll leave it up to you. We want interaction from the audience to ask them the questions you want. Let's keep it short. Questions, not comments. If you're giving a comment for half an hour, I'm going to stop you. Just short, straight questions, and you will get short, straight answers. We're not here to pontificate. We have limited amount of time. We have to be very straight about it to address as many questions as you have. Remember, we are here to empower you. We are here for you to ask questions very difficult that you cannot read about in the Wall Street Journal or the general media. This is what we do. Business is war. And the people who win wars are not the people who have the biggest balance sheet or are the smartest people. Far from that. The people who win war are the ones who act based on actionable intelligence. This Financial Policy Council is a forum to provide you with answers to actionable intelligence where you can act upon it in every single asset class. Remember that. Forget about the newspaper, the propaganda, the TV, the media. They have agendas. They want you to submit to their agenda. Our agenda is for every single one of you to be a millionaire or a billionaire. We don't have no other agenda. Because the more we get there, the more you're going to be empowered, the more you're going to make money, and the more we're going to work together on forming this platform, on building this platform of wealth creation and empowerment. That's all what it is. And I mean every word of it. I'm not running for office. I don't care about I'm not saying things to please you. This is how I really feel, and this is how we sustained in building this organization for 12 years in liberal New York City, in a blue state that's anti-capitalism as much as you want. It's the persistence. So remember, there's nobody who does what we do. And if they do that, they do not allow these questions. It's censored. Everything is censored. You're not supposed to know this. You're supposed to be an idiot who just shuts up, listen to the government, and I hope everything is taped. I don't care, and accept their orders. We're not there. We are rebels, mavericks, wealth creators, deal makers, and we intend to grow this circle. Very important. So, enough said. Let me go to the questions, to a few questions I have for the panel. Please, no more than 3-5 minutes each, maximum. Then we will leave it to the audience to ask any questions you want. There's no stupid question. Be as controversial as you can. Don't ask easy questions. I want you to grill them. Literally, grill them. This is what we're here for. So, looking at the market at large, why is the renewables market falling so badly? Why, after 50 years of determined effort, are there no stacks of batteries in the desert backing up multiple thousands of square miles of solar and wind energy? And why is California still suffering power blackouts? So I'll go from here to there, each one of you, a few minutes, then we can go to the next question. And I'd like to start with Tim. Tim, what is missing from this market?
Well, yeah, if you look back, it is a 50-year-old market. And 1973 was the first energy crisis. I mean, it was the first oil embargo. So we have literally been looking at this for the past 50 years, interested in renewable energy. And there was a lot of innovation in that 10 years after that. You saw, a lot of battery research. Some really good work. The Japanese actually invented a ceramic engine to handle hydrogen, and that was really good work. But the problem is we haven't gone into production on a lot of this stuff. I mean, we knew back in the 1970s, solar power requires batteries to back it up. If the sun doesn't shine, you have no power. You need some kind of backup. But yet, after 50 years, we don't have suitable batteries for that. I mean, there are probably a couple of dozen different utility-grade battery systems, but they're not being mass-produced. And they're very expensive, and some of them have ecological problems, so people complain about them. But there is nothing, the proof is in the pudding. There are no big stacks of batteries in the desert backing up these solar farms, and there should be. And California is now requiring those, as far as I know. So all the solar farms have kind of halted, and they're thinking about this and trying to find ways to cheat. Well, that's not cheap. Let's produce a viable battery, and that problem is solved. The market would solve that, but right now what's in the way are government regulations, power company monopolies, and subsidies that are making things more expensive than they should be.
Thank you, Tim. Linda, what is the biggest frustration for large-scale solar farms in Nevada and California?
Well, I'll start just by saying I am a lawyer. I have to confess, I am a lawyer in the trenches. And what I do every day, my husband's in the back of the room, he could tell you for many, many hours every day, is I support renewable energy project development. And I would say that the biggest frustration is something that we can't do anything about initially, and that is it boils down to land ownership. And I say that because of roughly 80% of the state of Nevada, and surprisingly, more than 50% of the state of California is owned by the federal government. And therefore, you have to go through the National Environmental Policy Act process, which is the environmental review for those projects. The NEPA for short, for anybody who isn't in the business, is an extremely long, painful, complicated process. There have been efforts in recent years to abbreviate the process, to hasten it. The Trump administration came out with a 2-year deadline for environmental impact statements, and actually the Department of Interior came out with a 1-year deadline. Without getting too granular here, but that those deadlines were triggered by something referred to as the Notice of Intent, or NOI for short, that's published in the Federal Register that kicks off the NEPA process. And so in theory, under this Department of Interior guidance, that environmental impact statement should be done in 1 year, as opposed to the 5 to 8 years that we usually see. What happened was the land manager for most of the federal land in those 2 states is the Bureau of Land Management. So what the Bureau of Land Management did was plain and simple stopped the process of putting out those NOIs in any sort of timely fashion. So they just never triggered the 1 year and the 2-year requirements. So they came up with a workaround so that, even though despite the best efforts of the White House and the Department of Interior, the projects aren't moving through the process any faster because they just plain and simple don't start the process.
Thank you, Linda. Thank you. Very insightful.
Can I
Are
chime?
we seeing a major shift, a transition into the transition? What's really happening?
Can I chime in on the first question? Can I chime in on the first question too?
The first question?
Yeah, can I chime in on the question that
Yeah,
was
of
answered
course,
too?
of course.
And then,
Of course.
just for the record, I'm sitting in.
Yeah.
I'm sitting in for the CEO, CIO of Evolution Markets and Evolution Asset Management, who can't be here. But Yeah, so the renewable energy economy is certainly succeeding and has progressed dramatically. So from 2000 to 2010, the wind manufacturing economy of scale was developed, built, and deployed. And from 2010 to 20...
Can you guys hear him? Okay, just want to make sure. Go ahead, Ben.
Oh, sorry. From the renewable energy development process has certainly not failed. It has been a roaring success. From 2000 to 2010, a wind manufacturing industry was created out of thin air. And from 2010 to 2016 or so, and it continues, a solar manufacturing industry at competitive scale was created out of thin air to compete successfully with hydrocarbons and deploy at a much faster pace than any other technology type in the energy segment globally, and certainly in the US. The renewable energy has absolutely succeeded and certainly has significant challenges going forward. We can develop more renewables with the poles and wires we have and with the limited access to batteries and flexible integration tools we have, but we need a lot of batteries to make a big move next. And so the big goals that everybody's talked about are basically all dependent on batteries. And we just haven't gotten there. It's sort of time now to build out the manufacturing economies of scale for batteries globally. So again, we did wind in 2000 and 2010, we did solar 2010, 2020, but it happened in about 5 years. And then, batteries have effectively started now. So that's one thing. Renewables have succeeded and they've done fantastic. The US has deployed $450 billion of new renewables in the last 20 years while waiting for and helping cause the development of a global manufacturing segment at competitive economies of scale. The reason that California's lights went out, we all knew in 2012, we all knew in the market and the regulatory ecosystem that the lights were going to go out by 2020 if we didn't put batteries in. And they passed a law in 2012 to put batteries in, but the manufacturing economies of scale hadn't been built yet, and so the goal was set too early. And in simple terms, the reason the lights went out is because of sort of extremist dialogue between policy and the energy markets. So we just, the lights didn't need to go out, but the conversation about it got too extreme. And so the planning process got fragmented, and we're sort of catching up now.
Okay, thank you, Ben.
Yeah.
Thank you. We got the message loud and clear. Thank you very much.
Sure.
Harry, are we seeing the same in India? What are the pitfalls there?
I just want to cover in general, there is a gap how the renewable energy market is addressed. Ziad, one is the production, storage, distribution. So the production side, they paid attention to invest money into R&D and then came up with some reasonable solutions in the solar, wind. Now they're getting into hydrogen and various geothermals and all, but they did not invest in the storage side in the same amount of money, and R&D that did not go in, and the governments did not pay attention to that. And also our grids and the distribution things are also getting aged. They're not paying attention to that as well. So now coming back to Indian market, India and China are going to be the major consumers of energy because of the population growth. And by 2027, India is going to cross the Chinese population. It's going to be the most populous country in the world, India. And now they have a law to decommission the IC engine vehicles by 2030. And where are they going to get the energy to supply to those vehicles that are going to be in the market? And there has to be a lot of effort in the Indian market, but there's no capital. There's no money to invest into that, and they're encouraging to bring in a lot of foreign investment into that space. And now the markets are going in doldrums, and the capital cost is gone up because of the interest rates. And it is going to be definitely a challenge. So my proposal in general for the whole globe is to create an energy bank. So it is about $20 to $26 trillion market. We know that that is real. And
how long is it going to take? How long is it going to take?
It's going to take forever, right? But by 2030, every year they need to invest about $5.7 trillion into this market. There's no money. Unless there's a political will by the nations to create that kind of fund to invest into that market, which is going to generate about 80 plus million people's employment. So there is a need for it, and India is not ready to invest that kind of money and looking for outside investment. But there's a huge opportunity to produce energy that can be.
Thank you, Harry. Now, question 2. Governments have clearly a big role to play in the market, in the market's growth. Are they satisfied to hand the market to bureaucrats to regulate the markets into knots? Are they and monopolistic power companies our savior, or are they a problem to be overcome? Linda, how long does it take to build a large-scale solar plant? And I assume a number of years. And why does it take so long?
Yeah, it's what I had alluded to in response to question number 1, but it's the permitting process. And I am involved, of course, in the federal
So
permits.
how long does the permit usually take? Do they,
Well, again,
on the average?
the average has changed for a variety of reasons. One being that the Bureau of Land Management takes on less projects than it used to. But the average certainly would have been about 5 years before. I would say now it's down perhaps more on the order of 3 years once you
So
get
we're improving.
initiated. Well, once you get your project initiated with the federal
Oh
government.
my God.
And so that's the hitch right now. Right now, I work in the Southern Nevada District Office of, well, that's where my office is located. But they have indicated that they are taking on 11 projects, and that if you're not one of those 11 projects, come back and see them in 2025. And that's when you will have your next opportunity to perhaps start the permitting process.
So the governments are a problem or our savior?
Problem.
Of course, everything the government touches is a problem.
I can support
No,
that.
I'm not surprised of that.
Ziad, I'd like to add something as well.
Please do.
So Tim and myself, pre-COVID, we went to Washington, D.C. to meet the former energy secretary during the Trump administration. And we wanted to have 1 million acres of land allocated by the government because plenty of land is available from the federal side. But what we discovered is when they allocate that land, there is some county borders and state borders that span across. The federal probably may be okay. But when we cross those borders, it's a nightmare to
More and more
deal with.
bureaucrats.
More and more bureaucrats. And we tried to
Never
do
end.
that, and we said we need a lot more lobbying at a free point in time.
So is there a hope of taking over this, or are we going to rely always on them and their stupidity?
Yeah, what I would suggest is there has to be a land bank identified and free from all this bureaucracy, cleared by all permits from federal, state, and county and every level. And this is the farm allocated for energy. It could be wind or solar or hydro, whatever it is, so that we can go and set up our shop. That's what Tim and myself wanted to do. And now we got to pursue that thing. Otherwise, it's a nightmare.
I understand.
Ironically, while it's overwhelmingly true in our experience as well, ironically, in some cases, we need more bureaucracy. The number one obstacle to renewable development is a bureaucratic process called the interconnection queue, which is the application process for new generators to join the grid. It's a physics analysis question that's handled by a third-party independent system operator. That's a sort of bureaucracy. It used to take 3 to 6 months to go through the queue. It takes 3 to 5 years now. We need, they could write as many tax credits in as they could think of, and if they don't add human capital resources to the queue,
Okay, so
we
Ben,
won't get out of
who
it.
are the bad guys in here? The power companies?
No, of course
Who
not.
are the bad guys? The government.
There doesn't need to be any bad guys. There doesn't need to be any bad guys in our view.
They're always the bad guys.
Yeah.
In every deal, there's the bad guys and the idiots.
Look, I will support your view that there's a great risk of over-centralization as we process the climate transition. We could tell you stories upon stories of the least efficient allocation of resources and processes, the more centralized they are. In many ways, the story of the climate transition is the story of the democratization of the energy marketplace. And the populace sort of reaching through to make choices. Part of that process is education, and it's going to be a educational process like a young person's, right? We're all effectively babies in relating to energy resources. Deregulation in earnest started in the mid-90s. The broad consumer and most folks have no idea how it really works. And they're learning fast, but that process is going to have friction. But the pace, scope, and trend is clear as day. And the climate transition has been an extremely powerful force in democratization, ironically aligned with the deregulation movement, which is associated with free market policy outcomes, whereas the climate transition is associated with sort of policy-heavy outcomes. They're both democratizing forces, and in fact, the climate transition is really aggressive in that regard. So, in simple terms, if we don't democratize markets towards, surrounding the climate transition, we have absolutely zero chance of achieving the goals. And so it's a forcing function. The market comes in because it has to.
I get you.
And the forcing function in the climate markets is climate accounting. And so the thing to defend is climate accounting. And so governments can sort of wave their hands and say a lot of things, but if you hold them to the accounting of the climate accounting systems that they set up, the free market forces its way in because they're all on the clock. They all have deadlines and they don't meet them their way.
So Tim, what conflicts do you see?
A lot of conflicts. Let me kind of add something with a slightly different angle. I mean, we see the Biden administration has just passed some huge bills that subsidize renewable energy in the United States. For those of you who are Ronald Reagan fans, Ronald Reagan said, whatever you subsidize, you get more of. Okay, that's a good thing in a way from a certain perspective. The problem is the subsidies are not allowing efficiencies in the market. So you get subsidies and they're pushing you ahead in a linear manner. Well, that's not how free markets work. If you look at the development of the internet developed in an exponential manner. So by subsidizing incorrectly the renewable markets, we're interfering with the free markets and with the natural efficiencies that should develop in a free market that should be pushing this to the levels that the internet does, and that online banking, the cryptocurrency, all those things are free markets, and they're going at an exponential rate. Renewables are not; they're being interfered with. That's a distortion.
You'd be surprised to learn that the leading renewable developers have been trying to get the tax credit removed. You haven't heard that story, but that's been true for over a decade. And the reason, go ahead.
I get you. So Harry, can the government get out of the way, or is there a way to work around it?
Government has to get out of the way.
But what do you mean has? Depending
I'll
on the administration.
I'll tell you.
Yeah,
Yes.
please.
So right now they are giving free money to people, forcing them to use high cost energy.
Yeah.
Subsidizing. And government does not have money, they are borrowing and giving. That's not the way, right?
Yeah.
I rather give that subsidy, invest in the entrepreneurs so that they can develop scalable, efficient, and affordable systems. Right? That's the way it should be. And the competition has to be there for the entrepreneurs rather than invest in the R&D to make it affordable and democratize the energy production, distribution, and also storage. That's not happening. The governments are failing in the direction. They cannot continue to feed money because they don't have the money, right? So government is the problem. So government is not the expert. They are only tax collectors. They need to pay more attention on the infrastructure side and the administration side. Those but don't get into the business. And they're spoiling the business by giving free money rather than increasing the competition.
So okay, I don't want to turn political here, but historically, these actions were undertaken by any government, or are there some governments more smarter than others in handling the situation and seeing the importance of this? Or is it uniform? Is it like hopeless?
I don't want to call any party, right? But the governments that are pro-entrepreneurship, pro-business, they are good at it. And the governments who are promoting entitlements and those kind of things are not. Keeping people, shutting them off by giving them free money, that's not
okay, I get you. I just wanted to confirmation from you. Thank you for you know what I expect.
Thank you.
All right, thank you so much, Harry, and everybody. Now, a third question. Going into the micro stuff, are there any infinite number of innovative companies vying for market dominance? Or is it just a few companies whose stocks are rising solely because a great many investors want to be seen as green and the universe of investable companies is limited? First question goes to Ben. Are there enough companies to legitimately absorb the massive investment dollars on the sidelines now, Ben?
The energy, the decarbonization has just started, if you listen or believe the big plans, and it started with the electricity markets.
Could you please a bit louder, please?
Yeah, decarbonization just started, and it just started with the electricity industry, and it has started to move into transportation and agriculture as well. The electricity industry is where it started because it's incredibly regulated to begin with, so it was easy to put more regulations on it. As a result of it being heavily regulated, it's also highly insular. The energy market's not accessible for business historically. It just became a free market in the mid-90s. It's been a slow process. The opportunities are terribly limited, but they are there, and they will expand. There are great success stories that fit the climate transition investment thesis. In the last 2 to 4 years, they're private equity investments mainly. But slowly but surely and/or very quickly, from COVID to date and the institutional global consensus for net zero, the process of delivering the opportunity set to a broader range of investors has started in earnest for the first time in 20 years. So we're just starting.
Thank you, Ben. Very nice. Tim, give me an example of a Ponzi scheme in that space.
I've got a good data point for a Ponzi scheme. I'm interested in batteries, and I started looking at battery companies. I actually went out to visit one out on the West Coast, and it was a very good company, very good technology. And I saw their production facility. It was about the size of a gym, and they were doing these batteries one at a time, loading them up to the back. So I'm looking at this. I'm trying to figure out how much this company's worth. And based on how much their production and what they were charging, maybe it was a $100 million to $150 million company. Fast forward a couple of years, they've been bought by a SPAC, and now, and this company's been around for a long time, like 20 years. So it's a very they're not moving anywhere very fast. They were bought by a SPAC. Now they've declared that their valuation is over $3 billion now. So I'm thinking, well, what happened? I don't know the details. Maybe they found some factory in Tibet somewhere that's going to produce thousands of these batteries. But based on what I saw, I'm not thinking that they are. But suddenly, they're worth a lot of money. That's kind of the definition of a Ponzi scheme, right? Yeah. There's not enough assets to cover the investment dollars that people keep putting in. Yeah. The stock price keeps growing because people keep trading it and buying it. The underlying assets, maybe not so hot. So that, to me, that's an example of a Ponzi scheme. And I don't know who's invested in that now, but they're about to get their bubble burst, I think.
Yeah. No, I see your point.
Yeah, I would add to that. There's in the battery market, there's some components that are controlled by certain vested interest countries. Mm-hmm. And they are holding on to those resources and exploiting the people who have those resources as well. Take, for example, cobalt, which is one of the required element for the lithium-ion batteries. Mm-hmm. They are making it limitedly available. That's the reason the cost is still high. When they democratize this and make those resources available, the cost will come down to store significantly. And these are the Ponzi schemes happening around the world, and the people who are controlling raw materials are playing the games.
Thank you very much. Linda, back to you. How long did you say it takes to build a large-scale solar plant in the U.S.?
So I go back to my original answer, which depends on the nature of the land ownership. So for a project
So the approval is 5 years?
For a project on private land is entirely different. Would be about a year and a half at the most. And at probably 5 years at least on government-owned land.
Okay, so let me ask you, are you seeing resistance to innovation?
No, not at all.
Okay, good.
Yeah, I work with a large number of developers, and they even the largest ones embrace new technology. Everybody's always angling to have the newest and best technology.
Thank you. Thank you. Very helpful. Tim, you went through the telecom transition. What would you expect to be happening in a fully deregulated energy transaction?
Okay, I'm very much in favor of deregulating, decentralizing the power grid. In general, what happens when you go through a deregulation, and I did go through the telecom industry, I was in the internet business in the 90s. What happens is, as soon as you deregulate, you have thousands of companies adding new innovations, adding new companies, and trying to compete in this market, trying to get their foothold in a newly deregulated market. And this has happened in the airline industry, in the banking industry. There's some good studies that compare the different kinds of deregulation. And what eventually happens is that the people who are successful, they get bought, and you start to see an industry consolidation again. But the innovation, and you don't know what the final result is going to be. I mean, nobody from the 1990s could ever imagine what we're seeing on the internet right now. I mean, it's amazing and astounding and so creative. Well, I mean, maybe you don't want your power grid to be that creative, but still, I mean, you could have a decentralized power system where you put power on the grid, you power your bicycle and generate a few watts, and you get paid for it. I mean, why not? The power grid is a deterministic system, which means if you know all the inputs and outputs, it's a circuit. You know voltages and currents through the whole thing. A real power grid is a little more parasitic, and there are a lot of things that go on there. But basically, there's no reason why you couldn't do the same thing that the Bell Telephone Company did: have an infrastructure provider, and then have other people contribute to the power on that grid. I mean, that's kind of the exciting vision that I see of this. Will it happen? Who knows?
Thank you, Tim. Yes,
I would add, would like to share the real time happening right now in South Florida. Ziad, a lot of people are out of power, and they're not guaranteeing that when the power is going to come back.
Yep.
If we can decentralize that instead of relying on a central grid, introduce microgrids and produce the power locally, and then distribute it locally. And governments have to look into that aspect as well, and also if we had a cheaper battery technology, all those people probably could have a portable battery power available to those people who are displaced. And my heart goes out to those people who really got impacted with this hurricane in South Florida. But decentralization and also going into microgrids rather than central grids.
very insightful. Thank you, Harry.
Yeah, just a quick comment on what Harry was saying. You know, the power companies use the same argument that AT&T and Bell Telephone did 30, 40 years ago. They said the telephone system is so important, communications are so important, that we have to run it and we have to protect every little piece of it. Otherwise, it's going to fail and there's going to be catastrophe. Well, that's what the power company is saying now. And you know, it's not really... I see their perspective, and they are good guys, and they're doing what we've asked them to do, but that's not a market.
I totally get you. Thank you very much, Tim. All right, we're getting close to 8 p.m., so we've been talking for an hour here. So I want to, close at 8, not close, I mean close my discussion at 8 and leave it up to you, the audience, to ask some question. But I have one last question for the panel, and I usually ask it for every asset class we invest into. And this shows me how smart of business people you are versus how academically oriented you are. Because it matters, business people, that's what matters. So, if each one of you is handed $100 million from a family office to invest in that space, where would you invest the money, literally, by breakdown? Don't tell me, don't be general. The attention, the devil is in the details. How would you invest $100 million at your disposal right now, given that you know all what you know in this space? How would you do it? Starting with Linda.
I was afraid of that. I would look into storage projects on privately owned land.
What percentage of that is storage process, and why? Let's be specific.
100%
100% storage process.
projects.
Projects, sorry,
Yes.
project,
Yeah.
I mean, yes.
Yeah.
Storage project, 100%. Any specific location? No.
Well, we're in good proximity to the renewable energy projects, which are primarily the ones I'm familiar with, based in the west and southwestern United States.
Thank you very much. Take note of this, okay? Take note of this. Harry,
Yes, I would distribute that into 50-50 into production-wise and storage-wise, yeah. And the production side, a lot of new things are
so
coming.
50-50?
Yeah, 50-50.
Okay.
The production side, I'll pick some new technologies that are coming up. For example, current goes through, the production happens through direct current, and then you need to convert it into alternating current to see your power being used from the watts, right? So now there's new technology that's coming up. One of the company, I don't need to name here, but I can say ADC Energy, which is you could use either direct or alternate. The production agnostic, they could be from wind, from solar, from biomass, or from hydrogen, anything that can intake, and you don't need to have a heavy inverters and all those things. Alternate as well as direct connect can be used to the end consumption. That's
Okay.
one thing.
Gotcha.
That you use
Question.
on the production side, yes.
Question to you and Linda, since I didn't. Would these projects be startups or be cash flowing projects?
So I prefer to get into, again, within that 50%, I would
Within
put
that
the
50-50,
30% I would allocate into the startups with
Okay.
great ideas, with
Okay.
good IPs.
Okay.
And then 70% I would go into the growth side.
Okay. Linda?
You guys all know a lot more about that than I do, but startups,
understand, but-
startups are harder, there's more risk and harder to permit. So I'm just going to go with going technology.
Okay.
And
Ben?
I need to answer the storage side.
The storage up, please,
Yes,
sorry, go
yes,
ahead.
yes. So there's some new technologies coming. For example, California is paying to store nuclear waste.
Yeah.
And there's some
I heard
companies
that.
looking into using that, paid by the California state, to dilute the nuclear component and to prepare storage of the energy. So those are the kind of areas I would like to invest on the storage side.
Interesting.
Interesting ones.
Yeah.
Where you get paid to develop the technology.
Interesting.
And that will be a lot more in terms of ability to store
There's definitely
at
money
scale,
making.
at scale,
Yeah.
rather than, in the already lithium, these are all developed things.
Yeah.
You don't need to, there's no money to remain there.
I get it.
Scale.
I
So
get
that's
it.
where I would like to invest
I
in
get you.
storage.
Very insightful. Ben?
If you believe that demand for the climate transition will continue, and you believe that the organizing principles to effectuate it, like government, will lag in making the climate transition, environmental commodities will best express that tension.
Is this what you believe in? This is what matters for me, is what you believe in, not what I believe in.
The current state of things and the history of environmental markets certainly portends that near-term future. So the climate transition is in transition. We're in transition to the climate transition. That will probably take 5 years between now and then. Climate transition, real assets will lag. But the demand, if it remains, will be expressed through environmental commodity prices. So
Fantastic.
if the market needs oil, but we can't drill for new oil, oil prices go up.
Yeah.
If the market needs climate reductions, but we can't make new climate capex, environmental commodities express that.
Yeah, very smart. Tim, last but not least.
What I would do with it is I'd spend a couple of months putting together 1980s battery technology. Then I'd spend the $100 million on a production facility in southern India. Then I'd borrow another $100 million from Blackhawk Partners and put one in near
I
Nevada.
like your boldness.
Nevada serving California and southern India are the places to be.
Nice.
So
Thank you so much. That was brilliant.
We
Okay, I'll leave
had
it to
more
you, the
time to
audience,
think about
guys.
it.
Any questions you have? Or did we exhaust all the questions here? Yes, Barry.
Can I borrow $100 million? Well, the question would be, obviously, I assume most of the people in this room do not have $100 million readily available. So for the average person who says, I want to put $250,000 into this, what would that look like? I mean, the things
Very
you're
good
talking
question.
about, very difficult for the average person to get into. Maybe, higher organization. So just roughly, I want the exact ticker symbol and what price will it. So I mean, what is somebody who invested after listening to what you said?
Yeah, there are burgeoning environmental commodity funds available in private client services markets and through organic networks. There's also a publicly traded index that tracks a core part of the environmental commodity marketplace called KRBN. And it's a crane share index. It's appropriately constructed to represent sort of the most consistent, stable, and liquid portion of the environmental commodity market, and it's performed extremely well.
Great, thanks.
There are some niche funds out there that we could use, Barry, and we have one of those funds that we focus on. We'd be happy to take $250,000 into our fund, where we are very closely identifying 30% we putting into with strong IP in the space and 70% into the growth area and niche areas that.
Thank you, Harry. Great, Barry. Who else? Omar.
So we all know that this is an area of tremendous potential growth and sustainability, but just out of curiosity, it sounds like what you were saying earlier, that in large part, the renewable markets are being artificially sustained with subsidies and green energy policies. What would happen to renewables if these artificial market pressures were removed in comparison to nuclear, coal, and other fossil fuel markets?
Yeah, I'll take that one. So all energy is subsidized. Energy is inherently a public good, if not the primary public good, and so it's essentially a public-private partnership by physical definition, by virtue of physics. So until we can put nuclear power plants in our back pocket, it's a social decision, and we have to share poles and wires. Solar has created a slight exception to the rule. It's relatively insignificant in the grand picture. So it is the essence of a public good, is a shared process. As defined by physics, all energy is accordingly subsidized. We certainly believe oil and gas drilling is subsidized at the tune of 50%. Drilling risk is subsidized at 50% tax credits, and literally every single part of it is subsidized. The energy industry would largely love to shed all those subsidies. What comes with those subsidies are limitations on finance. And so we don't have access to the capital markets. We have to go through these crazy subsidy constructs that make the range of capital participants that we can use 2 handfuls big. So everything is subsidized, and subsidies really limit the flexibility of financial solutions.
Yeah, if I could add an opinion to that. I think, subsidies, as Reagan said, whatever you subsidize, you get more of. But I would say we need some capitalists in the government. Somebody who understands that the judicious use of subsidies could be a good thing, but general blanket subsidies are limiting, and they really distort the market. That's the name of this panel. This is a distortion of the market. The market needs to be kind of liberated.
And it's not the money itself, it's the allocation of it and the decision making. So the free market does the best job of allocating dynamic systems decisions. The government does the worst job. And so it's not the actual extra money, it's the way it comes out.
So I guess my underlying question underneath all that is, if we compare renewables with fossil fuels, what's the relative power production capabilities of each? I know that's hard to define.
I can answer that. Right now, they are producing only 14% of the power needed from the renewable side, and by 2030, they are projecting to make it double, 30%. By 2050, 50%. In order to do that, we need about $25, $26 trillion. The question is where the money is going to come, and R&D has to take place in order to make it commercially viable, comparable to other power production fossil fuels. And instead of subsidizing, I rather request the governments to invest in the R&D so that the production and at scale will become commercially viable. That's where the missing link here.
Yeah.
The core benefit and the core difference between hydrocarbons and renewables is that renewables have no fuel cost.
Right, the cost is upfront.
And
then
so-
you're done.
Invest upfront, exactly.
As we get better at understanding the longevity of our renewable capital assets, the economic benefits of zero fuel cost will continue to increase versus the economic benefits of ongoing fuel exploration.
Thank you, man. Jeff?
You say that renewables have zero fuel costs, but how much energy are these renewables producing versus their cost of manufacturing?
On a per megawatt hour basis, on a subsidy adjusted basis, renewables are out competing, and that's why they're the ones being deployed. Oil and gas, well, to be specific, coal has been summarily removed via policy and hasn't had a chance to compete in the last 20 years. So, you know, the competitive field is not fair. That is not to say it is fair. But it is where we have resources. Renewable resources don't exist everywhere. So you have wind in some places and solar in some places. Where you have resources, they outcompete hydrocarbons, subsidy adjusted, and or are flat to gas right now.
So also the cost of
Well, they're below gas now because gas is up 4 times. But yeah.
energy production, the carbon production that is happening. So your indirect cost is going to be huge because that indirectly you pay a lot of money for health related impacts, environmental related impacts. That cost is a lot more than the amount of money needed to invest into producing renewable energy to make it net zero.
The real limiting factor with renewables is exploration, is the cost and availability of rare earth for batteries. And so the environmental cost of renewables is you know, from a battery perspective, is a huge issue. The availability of rare earth is a huge issue. It is not a straight line to the renewable goals that are being spouted.
One of the, if you don't mind, one of the problems with renewables is it's not very space efficient. You know, gas and oil have been compressed by years and years of pressure. I mean, they're very compact fuel sources. Renewable energy is not very space efficient. Linda and I were talking at one point about a place called the Amargosa Valley, which is about 200 square miles of nothing. And the people who live there, the few people who live there, really, really want solar power because they have all this space. And it would be really profitable for that community to have solar energy. But it's space that's not being used.
It's generally a false dichotomy. The answer is always both.
So, sorry, going back to you, Tim, when you talked about the internet, the evolution that you saw, the internet was not made sort of in someone's garage, but Instagram was, right? So the backbone technology that created this incredible shift in humanity's art, it came from military.
Right.
So my question
the basic
is,
technology, yes.
Yeah, so my question is there an understanding of technology in the military landscape that could disrupt this entire thing that we're talking about? Can it be privatized? Because that's where I see hope. Technology that's way ahead of what we're seeing on the ground in a granular level. Is there anything hopeful in the future that could be privatized that would really disrupt this?
I guarantee you there will be technology that will revolutionize the power grid, and we don't know what those are yet. And the same thing with the internet, we didn't know what was going to pop up. But you're talking about the original ARPANET that was developed by the U.S.
packet
government.
switching. So.
Right, but it started growing exponentially once the capital markets got hold of it.
Well, once it was deregulated, like you said.
Yeah, you had to deregulate the phone system first, and I mean, what were data speeds in 1970? 300 baud, 300 bits per second. Now you get literally a million times that.
But it sounds like we need something to deregulate, and we don't have the thing to deregulate.
Oh, okay.
Small modular nuclear would be
There's an exact parallel here. AT&T and Bell Telephone were told other people need to use your infrastructure. You can charge them a fee, but you have to let them use it. The power companies are controlling the infrastructure. It is entirely possible that you could put a small nuclear plant on that. MIT was doing a lot of that stuff. Or a small solar field, an acre. You have a spare acre in a city with solar there and just temporarily generate power, make money from it. Pay the power company for the infrastructure to sell it from point A to point B, and you could have almost exactly the same economic structure, dynamic capitalist structure. The internet started growing because entrepreneurs found a way, hey, I could put a fiber optic cable from here to there, and I can lease it out to all these major providers, and they'll pay me for it. Why not do the same thing? I mean, it's the same
Part of
concept.
it goes back to what you said about the farm, right? And you talk about the bank. And
Yeah, I can answer your question very straight. I went to MIT Sloan and I had the opportunity to go to MIT Media Lab, right? So it could be DARPANET or government research, but even the academic institutions have a lot of technology sitting on the shelf. Only thing is they need additional capital to make that baby to walk on the street. The IP sitting there doesn't make any sense, right? Now you need to test it out, you need to produce it, you scale it. Those things, that's where the dollars are needed. Instead of subsidizing, my thing is invest in those places where the technology can be democratized and make it available at cost, at a cheaper price and more efficient way to produce, store, and distribute.
Okay, let's leave some. Go ahead.
I heard about renewables, and with renewables there's issues of location. What about investing in the distribution of energy from the different locations where the renewables are to where they need to be? Is that a good place for an investor to place his dollars for ROI? That's my first question. The second question is, what about the energy sources that you did mention, like the thorium reactors in India, or placing solar in space with a distribution network, or going even further, the new reactors that burn uranium and the waste product of the current nuclear fission process?
Yeah, very good questions. The first question, remind me again, just quickly,
The distribution network.
right, so transmission is generally a large infrastructure, private equity and or utility sort of rate-based economic outcome. So it's extremely stable, effectively long-term yield. So transmission pays in the form of long-term yield, if that's your form of return interest. The demand for transmission is unspeakably high. Effectively, every promise you ever heard about renewables requires a massive amount of new transmission development.
Are you saying that the problem is the government won't allow this to happen?
Interstate transition permitting is not an efficient process.
But I do it. I work with independent transmission providers.
Second question, great question. For the 20 years leading up to the last two, the climate transition was really led by environmentalists and wind and solar proponents. However, in the last 2 years, with the institutional consensus for net zero, everybody has joined the party, so to speak, including all the other technology solutions. And so for the first time in 20 years, everything ranging from something as benign as hydro to something as impactful as hydrogen has come to the fore and has been carried and promoted by the biggest energy companies in the world. And so sort of the everything else other than wind and solar opportunity just kicked off 2 years ago.
So just to add to a little more on that, the market is moving towards decentralization, the way the blockchain decentralized, right? The same way that distribution is also getting decentralized with microgrids and local production of the power and consuming locally rather than investing in this huge infrastructure of building these transmission lines to crossing from state to state or country to country. It's a huge red tape that to be, and it's a long-term investment, and people don't have that kind of investment anymore.
Okay, let's leave something for other questions. Anybody else? Yes, Pablo.
Yeah, is there currently in the US going on a large-scale HVDC project based on solar power, like the one that Hitachi is building between Champlain and New York, that is based on hydro?
And it hasn't caught on as much in the United States as it had. I mean, China is building huge high voltage DC lines across their country.
Then why is that?
To be right honest with you, I don't know.
To reduce the transmission losses, right? That's the main reason. That's the key point there for having the.
But the technology is there.
Technology is out there, but what is happening in the US, you already have these lines. For example, when the rest of the world went with mobile phones, they don't need to install these ground lines, right? So here we are stuck with this legacy systems
Yeah,
here,
I
and
get
to
you.
redo all that infrastructure, you need a lot of investment, and we don't have that kind of money. We
Yeah.
need to borrow money.
There is one that's been fully permitted that runs from Wyoming to southern Nevada, but it's still looking for off-takers, so it has not commenced construction.
Based on solar,
Wind, actually,
wind, okay.
It could be anything, actually. The source, it could be anything.
it could be.
I'm a great fan of, I work with Dr. Hari and I do a lot of work on solar and green hydrogen. So great point about southern India, because just to share that Tamil Nadu, which is a southern part of
top solar installation.
exactly.
The top 10.
So they basically use the grid system which was already there for years and years. And Tamil Nadu leads the wind power, which is probably double of wind production in Denmark and Sweden combined. So it is absolutely doable. The issue is really the policy. So I think the problem with the US has been it's never been consistent on really coming up with a very clear policy on renewables, whereas the rest of the world is like really moving on to innovation. And Dr. Hari's point of democratization of energy production at the local source with a combination of renewable energy transmitters. It just cannot be only green hydrogen. It needs to be looked at solar. It needs to look at tidal. It needs to look at wind. So I think it's a challenge. The only problem now is that we have a climate crisis, right? So given that there is a climate crisis and there is this whole issue of oil and gas.
Your question?
So my question really is, the question is, there is this interest of the oil and gas industry, which actually has prevented the production and innovation in the space of renewable energy. So the finances that needs to come in with this bank, how do you really see that challenge being, overcome?
So to answer that, they created IMF, they created World Bank. They need to create an energy banking bank, just to fund so that the consistent flow of money happens at a consistent cost. Right now, if I want to build one solar farm in Nevada versus India versus Africa, the cost of capital is huge difference, but they're expecting to produce at the same price, which is not going to happen. So you need to have a flow of capital, consistent cost. That way, the power generation and all those things will be appropriate, and that's where I think there should be a land bank identified to produce energy, and there should be a money bank that can fund these projects.
Very, very exciting. Very true.
Just a comment on that, and this is going to be a strange story. If you read my bio, you know that I used to work for the CIA. And one of the things that was crazy in my industry, we used to go in and spy on people, and we would intercept their telephone systems. Well, the richer countries had older systems. They were easier to intercept. The poorest countries that were just getting their new communication systems had the most advanced stuff, because that was the only thing on the market. That may be a trend that we see in power.
Yes.
The developing countries are going to get the best technology.
Absolutely.
That's interesting.
And we may subsidize it.
They are leapfrogging. So skipping
exactly.
all the 2-3
Leapfrogging.
generations, they're skipping, and they're going to the most.
Amazing. Okay. Who else? Jeff, you asked your question. Somebody else.
I'm sorry?
Yeah, go ahead.
All right, so between the different asset classes.
I'm sorry, we can't hear you from there. Could you go?
So between the different asset classes of energy, solar, wind, hydroelectric, which ones have the number one highest growth potential in terms of total market share, and two, the highest path to profitability? Who has the highest road to increase margins over time in, let's say, the next 5-10 years? And I
think wind and solar kind of matured in their space. Wind is on the top, then the solar, and hydrogen is the next big thing that probably you can bet on to make some money. And then another thing is coming up is compressed hot air technology. So I test drove one car in France 2 months ago, and they take the atmospheric air, they compress it, and that cylinder drives the combustion engine instead of petrol, diesel. The compressed hot air, and the exhaust is cold air, minus 20 degrees centigrade cold air. Let's say you produce energy and you use that cold air for air conditioning and all those things. That we're trying to bring that for a data center here. I'm just giving an example. Those are the things where you invest to make some money rather than in a mature technologies.
Okay.
For a stable income, probably wind, solar is okay, but for aggressive rate, you need to think of something different.
Go ahead.
So typically when we think of renewable energy, we tend to think of increasing capacity to offset, the legacy systems. But do you think a better investment would be into trying to invest in, say, new distribution systems or better reactors? You know, for example, chemical manufacturing is like 20% of energy consumption. So do you think your investment would much better yield more fruit in reducing the energy costs as opposed to increasing the capacity of
These are all capital intensive. Nuclear reactors, you need lots of money. Distribution lines, you need lots of money, but they'll give you a stable income, right? You get like some fixed income kind of thing that you could park your money safely and then retire. But you want to look for 3x, 4x, 5x, 10x growth, that's not the space.
Yeah, if I can interject something. Harry mentioned a while ago that we actually met with a former Secretary of Energy to talk about some of this stuff. And I read that guy's book, and he was lamenting because you could solve all of this with nuclear energy if you wanted. No more CO2. It's very clean, very safe. But he said, well, it's never going to happen because that's the not in my backyard thing. Nobody wants a nuclear reactor in their backyard. I don't think we've started a nuclear plant for like the last 30 years.
It's shutting down.
Yeah. And yeah, Europe is shutting them down, even though they're going to pay for it this winter.
Thank you, Tim. All right, so we're going to close in 5 minutes. So we can take a couple of more questions. Jeff, go ahead.
So, first of all, Linda, what pushback do you think that BLM in the state of Nevada is getting from the locals that don't want a wind farm in their backyard?
Oh, yeah, wind is particularly controversial, and particularly in Nevada. My husband and I own some property in Iowa, and we drive by miles and miles of wind turbines. Of course, it's private land, that's the biggest difference there. And then you get to Nevada, and you know, for hell or high water, you can't get a wind farm built there. But it is primarily, it's the NIMBY, not in my backyard. There is one small wind farm in Nevada, but there is huge public disdain for wind.
So that would be the problem at the county level, as we were talking about earlier. These county commissioners, these local guys, they want to be elected next season. So
You're coming up with some, let's say, $1 billion project, and you are stuck with some county permit. What happens to all that money that you have on the table? And
a small community group can challenge you in court because they don't like the environmental impact of what you're doing. Even though the overall impact would be great, they don't want it next to their school or whatever.
They don't have to go as far as to challenge it in court, because as you pointed out, there are county permits that are required. Conditional use permits, special use permits, they're called different things in different counties. But you have 5 county commissioners who could stop a project that someone in the White House thinks is a great idea, and somebody with 400 constituents can stop you on the bottom end.
God bless America.
that is the cost of democracy. So it is paid sometimes.
All right, thank you guys. So thank you all for coming. I hope it was informative, challenging, fun. Our next event is going to be on November 17, same place. The subject is about fintech. Vladimir, where are you?
I'm here.
Stand up, talk a bit about your next event. Vladimir Lunigov from mBank.
Thank you very much. So it's a great opportunity for us to sponsor one of those events, and we'll have quite an interesting panel, similar to the panel that you have right now. The subject is fintech. There's a lot of controversy going on right now, especially in the crypto space, and we work a lot in lending as well. There's a lot of controversy going on there. So we will pick a subject that will be of interest, and we sincerely hope that you will be able to attend.
Thank you, Vladimir. As you can see, we try to tackle every asset class. Today is renewable energy, next time is fintech. We talked about topics about Bitcoin, cannabis, private equity, real estate, you name it. If you would like to sponsor an event with a bunch of panelists, have an interesting topic to debate, have enough brain power to discuss the topic, then you're more than welcome. So thank you so much for your time. Mark your calendar, November 17, same time, and I hope you have a great evening. Thank you so much.